Good day 11-1. So we'll continue the discussion. Last time we discussed markup problems. Markup is like an amount added to the cost to arrive with the selling price. And we have used the following formulas. There's another term which is similar to markup and we call it mark-on. So it's amount added to the cost. It happens during peak season or there is a shortage in quantity. The formula that we'll be using is this one. Selling price is equal to the original price of the item multiplied by 100% plus the mark-on rate. Let's have an example. These examples usually are seasonal or during season or there is a shortage or a holiday. Every Christmas, there are lots of round fruits. Example, Kulas is a fruit vendor and he is selling oranges for 25 pesos per piece. Every December, the sales of these round fruits are very high. So he decided to put a 60% mark on. What would be his selling price? So using the formula, the original price is 25 pesos per piece and the mark-on rate is 60%. We will substitute this given to our formula. And then, using our calcu, we have 40 pesos. So during December, Kulas can sell his oranges for 40 pesos per piece. So this is similar to a markup item. Let's now proceed to the next lesson, which is markdown. And under markdown, there's this perishable goods and the combination of markups and markdowns under multiple operations. These are the objectives. First, determine the markdown and the markdown percent. Second, determine the sale price. Third, determine the original selling price. Number 4, compute a series of markups and markdowns. And lastly, calculate the selling price of perishable goods. Take note, for every objective, there is an example and corresponding practice items. So hopefully, you will answer the examples and the practice items. Okay, let's start. Definition of markdown. There is a price reduction, marked down. So there's a down or a decrease in selling price. We will use the term sale price for the promotional price of merchandise after a markdown. And we have the formula. Amount of markdown is the original selling price minus the sale price. And the markdown rate, the ratio of amount of markdown and original selling price. So we will do objective number 1 for the next slide, which is determine the markdown and the markdown percent. Let's illustrate. If a shirt was originally marked at 450 pesos and then was sale price at 299 pesos, the amount of the markdown will be 151 pesos. How did we get that figure? We simply subtract the original price and the sale price. Example number 1. A plastic basin that originally sold for 60 pesos was marked down and sold for 48 pesos. What are the amount of the markdown and the markdown percent? Using the formulas presented, original minus the sale price will give us the markdown amount. 60. The original price is 60 pesos and the sale price is 48 pesos. So the amount of markdown is 12 pesos. Now, The markdown percent is the ratio of the amount of markdown and the original price. So 12 divided by 60 is 20%. So that is our markdown percent. For your practice, let's now go to the next objective, which is determining the sale price. So we have this formula. This is similar to our formula, portion, base, and rate. So notice, in terms of values, sale price is a portion of the original price, which is our base. And the rate is 100% minus the markdown percent. So let's use this formula in the next slide. Example number 2. A men's shop originally sold a line of ties for 200 pesos each. If the manager decides to mark them down 40% for a clearance sale, what is the sale price of a tie? So sale price, the formula, original price multiplied by the difference of 100% and the markdown rate. By substitution, 200 pesos is our original price. Our markdown percent is 40%. Substituting these values, we have the following sale price. Each tie is sold at 120 pesos each. For your practice, third objective, determine the original selling price. Using the previous formula, we can divide both sides by the following expression, 100% minus markdown percent. So the resulting equation is now original price, it is equal to the sale price divided by the difference of 100% and the markdown percent. Let's use this formula in the next slide. Example number 3. What was the original selling price of a mountain bike currently on sale for 8,100 pesos after a 25% markdown? So the original selling price, substitute the given values to our formula. 8,100 is the sale price and the markdown percent is 25%. The result is 10,800 pesos. So, before the markdown, the mountain bike is the original price of the mountain bike is 10,800 pesos. Practice this formula in the next slide. Let's now go to the fourth objective. Example number 4. So for this example, the objective is to compute a series of markups and markdowns. In March, a boutique purchased designer clothes for 500 pesos. The original markup was 60% based on the selling price. So let's focus on these two sentences. We need to find the selling price. So based on our previous lesson, we have this formula on markups. The cost is 500 pesos and the original markup based on selling price is 60%. After substituting these values, the selling price is actually 1,250 pesos. Now, let's go to the next sentence. Take note, the selling price will be used in the next sentence. In May, the shop took a 25% markdown by having a sale. Okay, so we have the selling price. There is a 25% markdown for this sale. So, formula, original price, then 100% minus the markdown percent. Our original price is 1,250 and the markdown percent is the ones given, 25%. Using your calcu, the sale price is 937 and 50 cents. So take note, this is for the month of May during the sale. Next sentence. After 3 weeks, the sale was over and all merchandise was marked up by 15%. So we'll be using the last answer, which is the sale price for the month of May. What is now the selling price if this is marked up by 15%? By substitution, the selling price is 1,078 pesos and 13 cents. So this is after 3 weeks after May. Using this figure for the next sentence, by July, many of the clothes were still in stock, so the shop took a 30% markdown to stimulate the sales. So the last selling price was 1,078 and 13 cents. There is a 30% markdown to stimulate sales. Formula: by substitution, we have the sale price, which is 754.69 pesos. So this is the sale price for the month of July. Now for the last one, at the end of August, the balance of the clothes were put on clearance sale with a final markdown of another 25%. What was the final selling price of the clothes? The last sale price was 754 pesos and 69 cents. There is a final markdown of 25%. By substitution, the final selling price is 566 pesos and 2 cents. Therefore, the final selling price is 566 pesos and 2 centavos. Take note, the original price before was 500 pesos. Still, the company still earns something. For your practice, let's now proceed to the last objective. Perishable goods. These are products that have a certain shelf life and then no value at all, such as fruits, vegetables, flowers, and dairy products. For this objective, we will use this formula. The selling price of perishables is equal to the total expected selling price divided by the difference of the total quantity and the anticipated spoilage. To use this formula, we will observe the following steps. First, we need to find the total cost and the total expected selling price. Next, find the anticipated spoilage. Then we can now use the formula to calculate the selling price of the perishables. Example 5. The farmer's market buys 300 kilos of fresh dragon fruit at a cost of 100 pesos per kilo. If a 15% spoilage rate is anticipated, at what price per kilo should the dragon fruit be sold to achieve a 50% markup based on selling price? Using the suggested steps, first step, we need to find the total cost. Then the quantity of the dragon fruit is 300 kilos and the amount is 100 pesos per kilo. So the total cost is 30,000 pesos. Now, for the total selling price, we'll substitute the total cost, 30,000 pesos, and the markup percent, which is 50%. Therefore, the total selling price is 60,000 pesos. So for step 1, the total selling price is 60,000 pesos. From step 1, the total selling price is 60,000 pesos. Let's now compute the anticipated spoilage for our step 2. The formula is total quantity times the spoilage rate. Our total quantity is 300 kilos and the spoilage rate is 15%. Therefore, the anticipated spoilage is 45 kilos. Step 3, we can now compute the selling price of our perishable goods. Based on the formula, we substituted the total expected selling price, which is 60,000 pesos, here in our numerator, and in the denominator, the difference of the total quantity, which is 300 kilos, minus the anticipated spoilage. So using our calcu, we arrive with this figure. The dragon fruit can be sold at this price, 235 pesos and 29 cents per kilo to achieve a 50% markup based on selling price. For your practice, and to wrap it up, we have used the following formulas. For markdown formulas, and for the perishable goods. Thank you guys.